तो माल बनाने के लिए यहाँ कोई है नहीं।
Well, 80% of the factories supplying cloth are shut. That is really what's happening on the ground. And overall, the consensus, as Yash was telling us, is that 40 to 50% drop in sales is what that market has seen. Well, it doesn't look like the woes are going away anytime soon. Devin Choksi, MD at KR Choksi Investment Managers, joins in. We have been speaking with Yogesh Mehta as well. Devin, good morning. What are your views on this? Because, we're getting feedback from various sectors, even the demand trends in the auto sector looking very, very weak for December. Do you think all of this is already in the market's price?
Yeah, good morning, Sonia. Well, I think from the channel checks we also carried out in last few weeks, I think we find that December month is a washout month for sure. I think most of the small trades definitely have been affected. As I heard one of the reporters saying, I think the workers have actually, run away from the place to their villages because they were not getting the money from the bank itself. I think the peculiar thing which happened in most of the cases, particularly in the textile trade, that the owners, I think, ended up paying workers' salary in advance till the February or March period in old currency notes, and those guys ran away to their village towns or hometowns. So obviously, I think that has affected their workforce activity as well. And at the same time, I think the demand scenario is also, affected because of the cash buying taking place into the market. But I believe, from understanding that, I think gradually things are coming back to normal. I think from what lows that they were operating at, I think the improvement in the conditions being seen, after talking to some of these people. So certainly, I think we do hope that somewhere in January second half, after the festive season, I think you should be seeing the kind of improvement happening into the system.
Okay. So your sense therefore is that markets don't have further depths to plumb, Devin. This kind of 70-80% in, of course, the informal sector will perhaps have a slightly lesser impact, maybe half the impact on the formal sector. Is that in the price?
I would think so, Lata. I would think that the most of the negatives are already priced into the market. In fact, I think we've been talking to some organized trades also. They have had also the similar kind of impact, I think, because of the cash sales happening on the counter, particularly, in the rural areas. Certainly, they are confirming that the improvement conditions have been seen in last 1 week or 10 days, in the month of December. And they too expect that somewhere in January, middle of January, the sales should return back. And I'm talking about those places where they've been selling pipes, they've been selling some of the farm equipments, they've been selling some of the farm inputs. The people have been confirming that the improvement is being seen in last 7 to 10 days time. So really hopeful that in second half of January you might be seeing some normalcy returning back into the system.
Okay, Yogesh Mehta also joins in. He is the Associate Vice President at Motilal Oswal Securities. Yogesh, good morning. Considering that it is F&O expiry today, how would you trade?
Good morning, Sonia. On F&O expiry, we have already seen pullback yesterday and day before yesterday to the extent. So we think that now it has been tapered off, and whatever has a rollover has done to the best of the 3 months average above that, and with the lower bips. So we think that now upside or the range for the day would be somewhere around 7960 to 8050 in between. So it will be a very choppy kind of a day rather than expecting any volatility on the expiry day.
Okay, would you trade only stocks, or are you trading the Nifty Bank as well?
Not certainly Nifty Bank, but on the stocks certainly yes. And on that we are recommending for the intraday purpose only that IndusInd seems to be a strong buy. Current price is 1082, and keeping a stop loss of 1075 in future segment, we can look at 1095 as a target. The other one is on the IT sector, Mindtree, which I already recommended this Monday as well on the same show. So from 497, it is now today 510, which is a crucial resistance level has surpassed on the closing basis yesterday. So still it's a good buy, and keeping a stop loss of 500, we can look at 530 as a price target. And even if it is a carry forward for the positional purpose, with the same stop loss, one can look at 540 to 550 range as a target.
Okay, and you also have a buy on Ultratech?
Yeah, and Ultratech on the cement side, we have already seen a drag from 3900 to 3100 in this last 1.5 months. But from here, it is showing a good sign of retracing. Currently, it is quoting at 3160. We are looking at 320, 3220 to 3230 as a target, keeping a stop loss of 3125.
All right, gentlemen, do stay on. We have lots more questions for you, but we have to take a break. We are back and we should be having the pre-opening rates as well. Welcome back. Well, for what it is worth, let's also check out what SGX Asia is doing, or Asia is doing and SGX is doing. That's okay, very, very flat. We will, of course, be governed more by FNOQs. Asia is showing a little bit of red ink all over, as did Wall Street, but then we have not been dancing to global cues. We've been going lower under our own weight, but keep this ambience in mind. Before we get to the pre-opening rates, we have a few minutes to discuss some more stocks. RPP Infra bagged an order for 54 crore rupees. These were two orders for the Kamarajar Port Limited and Chennai Corporation. The order book totally goes to 840 crore, we understand. We are joined by A. Nitya, the whole-time director at RPP Infra. Thank you very much for joining us. Ms. Nitya, what is the time length of this 54 crore order? By when have you to complete it, and what margins may you get?
In Kamaraj Port Trust, it is around 18 months and its value is around 24 crore. And it will be started from February of this year. Okay. And another project from Chennai Corporation, it has already started now. And the duration of that project is also 18 months.
So what could the margins be on this order, and also what does this take your total order book to now?
It comes under infrastructure sector, and the margin of Kamaraj Port Trust will be around 14 to 15%, and the Chennai Corporation is also the range of 14 to 15%. And by taking this order into account, the current order book size will be around 8-10 crore as of now.
Okay. And any kind of, plans to sort of expand in some of the other states as well? Any order visibility that you have over the next, say, 6 to 12 months?
Yeah, we have participated around 1,000 crore worth of orders in Tamil Nadu, Madhya Pradesh and in Karnataka. And we are expecting around 500 crore worth of order by this year end.
What is the order flow from states? I mean, after all, Andhra Pradesh and Telangana are in a growth phase. Is the flow of orders better in 2016 or late 2016 than it was a year ago?
Definitely, more works are floated upon this year. In FY17, more works are floated, and we are also getting more works from Andhra and Karnataka and in Madhya Pradesh. Other than Tamil Nadu, getting better scope in Andhra, Telangana, Madhya Pradesh and Karnataka.
So you said incrementally 500 crores by year end. You mean by financial year end?
Yeah, it's by financial year end.
Okay.
Any consequence or any impact of demonetization, Ms. Nitya, on the progress of work?
Yeah, definitely the demonetization effect is there. Since so far the laborers are paid by cash, now we are insisting them to receive by check.
Okay.
Definitely the effect is there. But this demonetization will improve the progress in FY 17-18.
Okay.
But the effect is there.
Okay. So hopefully it's a short-term one.
Yeah,
Thank you.
definitely.
Okay. Would it be there for next quarter as well? Jan, March, do you think will be better than this quarter?
Yeah, it will be better. By January itself, it will get slowly, it will be improved.
Okay.
But we are training them to receive the check also. But even though they are accepting to receive the check, but they are not able to encash it.
Exactly.
That's the problem. If the fund flow is better in January, then they will definitely accept for this.
This is very good to hear. Thank you very much, Nitya, for joining us with the details of your orders and the impact of demonetization. Well, the first tick in NSE Sensex is sounding very good, but Nifty is not chiming with the same number. So I think we should really wait. The rates are pretty wavered. I think we should use that time to get some more details, some more analysis from Deven Choksi and the other experts. Deven, sectorally, where are you looking at value now? Will you start buying cement? Our technical guys were saying that at least ACC is looking like a buy today. Is there anything in the cement space that you have begun to like because it has fallen enough?
Yes, Lata, I think within the commodity space, I think cement should be doing better off comparatively. Reading says that I think many of the large projects are opening up and are likely to open up big time after this particular move of government, wherein I think the banks are also comfortable lending now with the amount of deposits that they have collected. So certainly I think cement would be a favorable commodity as far as outlook is concerned. One important point I think which we observe is that in most of the cement manufacturers have been up till now operating at a little subdued capacity utilization because they have been fetching I think better price into the market. Now with the cash component gone in purchasing of cement, quite possible that I think the prices might fall I think for the cement, and it would probably force the manufacturers to I think increase the volume so that I think they can bring back the profits into the company. So I think that could be a temporary adjustment period I think which may happen I think over next 1 quarter or so, and that is the only period I think which one needs to look at I think little bit more carefully. Given that kind of a situation and possibility, I think one could buy if at all I think market gives an opportunity during this particular period.
Okay, well, for now, the Nifty is absolutely flat, so it's adjusted to a flat rate. And the auto stocks are under pressure, so names like Ashok Leyland, Tata Motors DVR, all of them down anywhere between 1 to about 2%. Deven, the stock that has seen a bit of a rebound in the last couple of days is Bharat Financial Inclusion. Do you think the worst is over for that stock, and would you at any point look to buy any NBFCs? If yes, which ones?
Well, I think, Sonia, the one important structural change which we are observing, and I think that could be a very pertinent one, the digital payment could possibly, I think, mean a lot as far as I think the banking system is concerned. Up till now, I think the banks were totally dependent on, I think, lending to the rural masses, onto the smaller companies and the NBFCs. Now with the digital payment gaining momentum, quite possible that I think many of the large banks which are having a good amount of deposit base may probably start getting into the rural areas gradually though, and I think start extending the credit I think through the digital mode of payments. So this could be I think a technological advances I think which could possibly mean that the banks would have some better edge over I think the smaller NBFCs and including the margin finance. Going forward, I think this could become a structural change, and I think that would be interesting to note. My reading says that I think I would be safe in investing with I think some of the banks, I think vis-a-vis I think the smaller NBFCs, including I think margin finance companies. From the long-term perspective, I feel that I think the stronger the company, the bank would be, I think it would be better for the investors to stay invested in them.
Okay, so that's the word coming in on some of these stocks. But, let's just get some more stocks out of the way now. On the upside, you have cement stocks that are looking reasonably better today. So Grasim, Ambuja Cement, etc. are all up in the green. Some pharmaceutical stocks also not too bad. So Lupin is up almost about 0.5% or so. But Deven, anything in the pharma space? I know these stocks have fallen quite a bit, but now in the last couple of days, it could just be short covering, but there's some revival in names like Aurobindo Pharma, etc. Anything that you're eyeing there?
We are comfortable with our positions in Cipla, and we want to add further into Sun Pharma. I think these are the two companies where I think we are very comfortable with. Sun Pharma, we believe that I think most of the negatives are priced in, and already I think the company is showing a good amount of possibility of showing the performance through Ranbaxy integration. The efficiency led gains have started coming in. That's what we learn. So certainly in this quarter of January to March, I think you should be seeing a complete impact of Ranbaxy absorption into the Sun Pharma's domestic business will get over. And given the kind of clarity that they have for the launch of and the new ANDAs that they have, I would rather think that I think this company at a lower levels would become an attractive one to add into the portfolio. And likewise for Cipla, I think where most of the cost absorption has already happened into the business in last 2 years. Now I think the business is looking quite alright as far as I think the efficiency of the operations are concerned. So Cipla could be another choice in pharma along with Sun.
Okay. That's good to hear. Well, Yogesh, I wanted to ask you, how are the rollovers panning out? Would you be worried about any pockets or would you be confident about any pockets?
Srilata, rollover analysis, what we have seen as on yesterday, it is showing that it is better than last 3 months average in terms of stock futures as well as the indices future. But the thing is, rollover might be because of the lower price. All the stocks and sectors have gone dragged very badly. So that's why there is a less interest of losing the positions. So unwinding is not happening, and people want to carry forward. And the bips are also at 36 to 38 basis points rollover. So it shows that interest on the losing positions, unwinding position is not showing at all in the market, and that's why we will see some restricted upside on the market because the long positions are still there.
Okay. On that note, let's thank Devin and Yogesh for joining us with their advice. Pre-market, it's a crucial day of trade, it being FNO expiry. And let's also welcome Jyotibadan Jaipuria.